Good afternoon, everybody, or good morning if you're tuning in from the US, and welcome to this stock market update today, the 8th of May. We're going to do a full update. I mainly wanted to talk about some news events. I wanted to do a brief recap of the FOMC yesterday, and mainly that. I mean, normally, or at least sometimes, I also take a look at some individual stocks that I like. I went over my watch list earlier today, and there's nothing particularly interesting that I like, or at least there's certain Dutch stocks that look quite good to me, but I'm not sure if many of you are interested in that. And then on the other hand, we have a lot of news to talk about, right? And then we'll talk about the news. We'll talk about what that could mean for the markets. And then we'll take a look at the technicals, all right, which I have already prepared for you right here. But we'll take a look at the news first. First of all, yesterday, FOMC. I watched it live. It was a bit of a nothing burger in my eyes. Not much of relevance was said. I mean, he further reinstated, he being Jerome Powell, he reinstated that they are going to wait for some more data before potentially cutting rates, and that the current policy stance was well anchored to deal with all the inflation and unemployment we have right now. And that's also reflected in the expectations. I mean, these are the expectations for June for the Federal Reserve interest rate decision, the 18th. And as you can see right now, it's almost an 80% chance that they will also not cut rates in June. And then for the 30th of July, we actually do have a chance at a rate cut. I'll keep my eyes on this data. This data does matter a lot. I mean, July obviously is still very much in the future. But I do agree that in June we're most likely not going to get a cut unless we get some very positive or, well, a negative inflation rate data until then, which is a possibility. And if that happens, I'll be the first to tell you. For example, in the free Telegram channel we have, no strings attached. Make sure to join that if you want to stay updated on the markets. But that's for now. Now, the major news today is obviously this. We're about to hear about the US-UK trade deal. Probably if you're watching this video, that has already been announced. Which, I mean, in general, this news, I would say, has a bit of a bullish effect. And yesterday, after the news, the markets, the post-market price also jumped up slightly. But in general, I think this was one of the least problematic trade deals to make. I mean, obviously, the US actually did not have a trade balance deficit with the UK. So do I expect much from this trade deal? From this trade deal specifically, no. I mean, obviously, it does matter that we get the ball rolling and that we see more trade deals coming in, and therefore this is bullish. But the trade deal itself, I don't expect much of a market reaction because of that. And I would almost lean, especially take a look at the S&P 500 in combination. A combination between the technicals, as in where the S&P 500 is right now, in combination with the potential sell the news effect. I would say a sell the news effect is even more likely to expect. A quick check within the video if we actually have some new tweets or not. No. So those are my thoughts on the US-UK deal. I think two more relevant news items right now are obviously the talks on Saturday in Geneva, in Geneva between the US and China. We don't have much content or we don't have much information about about what that will be about. I mean, what we've heard so far is that this first talk is first going to be about de-escalation between China and the US, so that they create some sort of a solid foundation based upon which they can form some sort of a trade deal. I have the same opinion on this as that I had with the US-UK trade deal. Even though this is a step in the right direction, I think that most of the bullish momentum we have already seen, all right, that we would have actually had from this. And I think it's mostly priced in. And I don't expect anything major from this discussion specifically. It's a good sign, right? It's definitely not bearish, but I don't really see any. Well, I do see possibilities for this to pump up the price, but I would say those are very unlikely, right? Because this is going to pump up the price if we actually do already get some knowledge about a potential trade deal. That would be great, and in general, if the sentiment from both parties is very positive, then that could also send the prices up higher. But again, in my opinion, the S&P 500 right now is at a major resistance level, all right? And given the fact that the US monetary policy is going to stay similar, which is still quite restrictive, I don't think any of these news events is going to send the prices up higher. But we'll get to that a little bit later, but that's what I think you need to know for now. I'll definitely keep you updated on that. And then lastly, which it felt kind of bad not to talk about this, but obviously there's a conflict right now in India and Pakistan, both of which, if you add up the people that live there, it's well over a billion people. So this affects a lot in the world. So far, I have to be honest though and say that this is not affecting the financial markets that much. It hasn't since the start. We can see gold has actually pulled back regardless of this conflict. So even though I wanted to mention it, it doesn't really have that much of an effect right now. Maybe if it escalates, it's a possibility, but for now, no. Market is pulling back a little bit here. The S&P 500 makes me think we have a US-UK trade deal, but it doesn't matter that much. I mean, essentially right now, the S&P 500 in my eyes is due for a pullback. I think the fundamentals have become a bit better compared to the bottoms right here. Obviously, most of you will agree with me on that. But if you check this level right here between 5,675 and 5,800, a little bit below that, but it's easier to say. It's a major resistance zone, all right? Historically, we've always needed quite a lot of volume to break out above that. This was also the main level that held as resistance, especially towards 5,800. When we started to break down after the trade war escalations. And I don't see enough strength or I don't see enough fundamental reasons, regardless of all the positive earnings reports, for example, over the last 2-3 weeks, to break out. So therefore, I'd say it's most likely that from here, we're going to pull back. If we, in the scenario, we actually do get some very positive results from Saturday, this is a possibility, right? I mean, it is on the table, but given, if we're talking probabilities, I'd say the probability of this at the moment is quite low. I'd say it's more likely that we're going to pull back. The first level that we're talking about is the POC right here at 5,475. That's where I expect support initially. And then given the strength at that support, I would say it's either most likely will stay in balance right here. I would say something like this, with still continuation slightly higher than the highs we made last Friday, is most likely. If we get some sort of bearish development fundamentally, I'd say we're dropping down into that major demand zone right here at 5,200, which I do expect to hold. And I would even say that's a bit of a buy opportunity, especially for the long term. But those are my thoughts. Those are my thoughts on the stock market right now. I think that's what you need to know. If you do have any questions, let me know down in the comments. But for now, have a great Thursday. Take care and bye.